Very interesting opportunity in the biotech space. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, biotech is here. Biotech, we do see some gains today, so there's some interesting behavior. Pull back 17% from the 52-week highs. So here is the chart of the XBI, and we will also look at the LABU, which is the way to get 3 times bullish exposure to biotechs. As you can see, the biotechs have definitively not the same chart that we see with like the semiconductors, XLK, the tech space. Here's the tech space ETF. Here is the industrials, very, very much elevated. XLF, financial sector, not as much. Let's look at XLI. So the point is that the biotechs, and let's also compare with the XLV, which is the healthcare, close-ish to the highs. So the biotech space, looking at the chart, it looks like a place where we might see some potential bullish action. Granted, there is a pattern here in the chart that is, bearish. We do have a monster head and shoulders pattern. So that's something to be aware of. The completion and full resolution of such a head and shoulders pattern would, of course, be very bearish. It is also the case that we are at horizontal support. And there's been times before, right, where you have a head and shoulders pattern that doesn't play itself out here. You could see like we have a shoulder, head and shoulder, and then no, instead we did actually find support and go up. So yeah, I do think biotech is interesting at these levels because you can have a relatively tight stop loss level. So looking at stop losses, yeah, we're talking about, 2-ish% below us. There's a lot of key support levels in this zone, looking at the daily data points. Like if, as an example, we use these levels as stop loss levels, like here and also here. You see also the wicks here, the low end of the wicks, they also have reacted to that zone. So then we are talking about a stop loss of, 4-ish% on the leveraged ETF. So that's doable. And we also see today that even though the market is pulling back, the XBI is showing some bullish action. But let's explore a bit further. Here is the RSI and the PPOs. We are at, a place where you see back here, and here, also back here, we did form support at this current level. So that's interesting. Corroborates a bullish thesis. On the dailies, we are not yet at clear buy levels on the RSI, but buy-ish levels. So we are at double bottom, and horizontal support. As long as these levels hold, I give the bulls. I think I give the bulls a 6. Let's look at the seasonality. To the left here, over the last 5 years in green, bullish. 7 years in blue, a bit more bearish, at least temporarily into mid-August. 10 years in red, this is usually a place where we see lows form. Looking at the table view, then we do see that so far August has been very bearish, 6.7% loss, but that's on the higher end of the loss spectrum for August. So you could certainly make a case that a lot of the bad news might be priced in to the biotechs. Looking at September, recently it's been more bearish, but we're still in the early parts of August. As such, I think I will give the bulls. Yeah, let me give them a 4 on the seasonality. I think it's pretty decent, at least for the current month. And we already have seen a substantial loss for the month, so it could be an interesting level. So here I'm comparing the biotechs against the broader healthcare ETF. Looking at performance, year to date, a much bigger loss here from the biotechs. Beta is 97, not that bad. 7 for XLV. No yield at all. Price earnings is 17.8, 16.67 for the XLV. But that is, not that far from what one would expect. The biotechs certainly do have a higher level of volatility. Let's actually compare it against IBB. Let's do it like this, IBB. And that's the other biotech ETF. Let's look here at the performance. So the XBI has underperformed. The IBB actually does have a lower beta and a bit more yield. So let's explore a bit further here. You see here that the IBB is much more dominated by large caps. So the XBI is way more spread out. Hence, the difference in the PE, if you adjust it for the market cap, then it might not be that far off from the IBB. So on the paper, yes, it is true that IBB has a lower PE, so like better valuations, but large caps usually do have that, more secure business models. So in this case, when it comes to the fundamentals, I think I give the bulls a 2. It's a bit bullish, but it's not like super bullish. So here is the relative performance. So comparing XBI against the S&P, minus 2%, minus 8% with the healthcare ETF XLV, minus 49% with LABU, the leveraged biotech ETF. Let's compare it against the IBB. Then it's minus 11. So the correlations here. LabU is the bullish one, just to be absolutely sure here that there's no errors. Biotech bull. Let me just type this in again. LabU. That's not good. Yeah, so the LabU is not really an amazing way to trade biotechs. Let's look at short-term correlations. Okay, so now the correlations certainly changed. So let's be absolutely sure here. This is why LabU. Let's check. So maybe I picked this one. That would be a mistake. LabU, check. Amex. Let's just go a bit back and forth. Then we go to XBI. So now I get 97% positive correlation. That's a very different. On the dailies, 28% with S&P 500, 15% with XLV, and 90% with LabU. Okay, so now it works a lot better. That's a pretty big difference. Let's look at IBB. 76% short term, long term 79%. So it's pretty clear that the XBI is the one you want to look at if you are considering getting into the Direxion leveraged biotech ETFs. Interesting. Very interesting. So let's now compare the XBI against, let's actually just do the IBB. So the XBI, that biotech ETF, it has now significantly underperformed the IBB, not at extreme oversold RSI levels. On the dailies, we are a bit close-ish to those levels, so that's a bit more interesting. So looking short-term here on RSI, we are in a very interesting level in this pair. Seasonality, August, we have seen the XBI, it's the biggest underperformance versus the IBB, so that could be contrarian bullish. Let's compare the XBI against the XLV. XLV, like that. Yeah, one of the worst Augusts so far, which is contrarian bullish. Let's quickly here look at the chart for IBB. Something a bit similar-ish, but not as attractive of a chart as what we see with the XBI. Yeah, the XBI. Let's look a bit at XLV. A bit of a pullback here, a bit of an uglier candlestick today on the XLV, a bit of a rotation. happening here. So yeah. Okay. So looking at relative performance, I think there's a lot of good things here for the XBI. I will give it a 6 for the bulls. So we end up with 4.5 in favor of the bulls. We are at the double bottom. We have horizontals of support, and we also have some corroborating reasons to be bullish. However, I am quite fond of having like a stop loss level. In this case, I think on the LABU, if I were to go that route, yeah, maybe like a 4% stop loss level. It's a bit, it's given that it's a leveraged product, you just have to be a bit wider with the stop loss, but 4%, maybe max 5% is like okay. The lab, you can see that the current share price, a unit price, I guess, is around $5. So one of the ways, right, you could defend a wider stop loss level, that is if you have a smaller position. Because if I were to like put down $100 with a tight stop loss versus putting down $50 with a wider stop loss, then sort of like the exposure is sort of like the big thing there. So with the bigger position, you definitively want to be even more strict with the stop loss, but you could defend a bit of a wider stop loss level if you have a smaller position. And when it comes to the LabU, which is a leveraged product, we do definitively expect some level of volatility. Yeah, all in all, I think this is a pretty interesting setup. So yeah, as always, I'm definitely quite fond of having like some bullish positions, some bearish positions to be like overall market neutral. And you will do, and as you saw here when we went through the sectors in the market, some have corrected a lot, some have been on a big tear. It means we have proof that throughout you can actually have a long short portfolio. It's all about like being bearish on the sectors that are pulling back and bullish on the ones that there's reasons to be bullish on. So yeah, I do certainly prefer that method, and I think that the biotechs are interesting now from a more bullish perspective. But as always, you do want to have a stop loss level because that enables you to participate a lot more in the market. You can be wrong more times, and even if you have a 50-50 track record, but you are a bit strict on the stop loss levels, then it works out long term.